Hey, okay, I created this because I wanted to make sure that everybody got a grasp of what break even actually is. Sometimes it's hard to understand, and I'm trying to create this graph just to try to simplify it. I hope it did. So I'm going to go through with it with you. So, but basically, in our business, we need to understand this point right here, this break even point. That is the most important number in your business, is to understand where that comes in at. Okay. And so down here, every business has fixed cost. Okay. That's salaries, that's rent. Those are the things that are the same price every month after month after month. Okay. And then we have overhead. Now, fixed cost is our overhead, but we also have some variable overhead, right? Like, oh, marketing is variable. Can be. Can be fixed as well, but it can be that. Gasoline, any of these things that are coming and going inside of your overhead on a monthly basis. Now, these fixed costs are the monthly cost. So you got 12 of those costs every month. Then you also have some variable overhead, which is right here. So to get to this point, we have to cover our cost right here. But if we're not covering our direct labor, our other overheads, other sales costs like material and equipment, you still have to, this is the point you got to be when you're adding in your overhead, your direct labor, sales costs, material and equipment equals your break even. So all of this plus this equals this break even point. Okay. And that is the point that we start making money. Because at that very point right there, we have made $0, but we've covered all of our cost. Okay? So this is the portion, this is a total cost line that should be going in this direction, where your sales revenue line is going to go in this direction. And that's where those two lines intersect. Okay? Here's your total cost line right here. That's your fixed and your variable. It's going to at some point intersect with your sales. Okay. And if it's not, you're definitely losing money. So if you're not going up the hill here. So that variable cost, however, can still escalate with sales because of equipment cost. Okay. Sales cost, direct labor. Okay. All of that equals your break even point. And this variable cost will continue to rise with sales because you're going to have a cost associated generally with additional revenue. Now, at this point here, we've covered all of our fixed costs, though. It's like the salaries, the rent, the truck payments, those types of things. Okay? But then we're still going to have those variable costs that are come out here, and we got to make sure that we're above this total cost to stay, because this is where revenue is going to go, because here's where profit lies, in between the sales revenue and the total cost. So within this gap right here, that is your profit. And it's also the reverse. That is your loss until you hit to this break-even point. Okay. So I tried to create a visual so you could see how this works. Okay. And if you've got questions, we can talk about it. I'm going to send it to all of you. Okay. Bye.